Hi, good afternoon, traders. This is going to be an update also, and I'm going to teach you guys how to trade using RSI or Relative Strength Index. But first, let's go ahead and take a look at silver. Now, also, whenever I'm placing some of these trades, I know we placed silver up here and closed right around this level. Like I predicted in my analysis, price is going to come down to here, and then we will look for buys, and then take silver up to like 18 or 20 by the end of the year. That's what I'm looking for silver in long term. Since I am giving you guys trade alerts, trade analysis, and I know everyone has a small account or a large account, when I close early, it's because some traders, I want them to be able to get a feel for the market. I want them to be able to understand the emotions of the market. But from now on, what we're going to do is we're going to stick through our trades through the entire analysis. If you get stopped out during day trading's range, then that's going to have to happen, or you're going to have to take profits earlier in terms of a 1 day, 2 day span, rather than holding it for 4 or 5 days like right here. But silver is going to come back down. That bearish hammer right here is a very strong reversal candlestick, so I really like that. But let's go ahead and let's talk about Relative Strength Index. Now, the Relative Strength Index in any indicator we use indicators to back up our trade logic. So if I'm thinking about taking a sell based off, a flag breakout or an Ichimoku breakout or price breaking previous low or previous high, I'm going to look at the RSI to find out what's overbought and what's oversold. So let's go ahead and put RSI, Relative Strength Index. I would not use the RSI first. What I mean by that is I wouldn't use the RSI and look at that first before you make any trades. This is a last minute thing to back up your trade logic. So let's go ahead and look at some important things while looking at the RSI. And I'm going to take a horizontal line here, here, and when price, let's go ahead and look at this. Let's actually put another one at the middle. I'll show you how I use it. It's close, it's on 50. So let's zoom out. When price is above 65 or above 70 up here, it's overbought. So let's go ahead and put overbought. So let's put it here actually. So when prices, you can see right here, this purple line is the moving indicator. So you can see the purple line comes right above 70. When it's right above 70, you can kind of tell by taking this point right here and putting it right here that this is where price is at when price goes above 70. Now when something's overbought, silver is being bought too much. So when something's overbought, there's too many buyers in the market, and it's going to have to sell off sooner or later, or eventually. So when we see prices overbought on a bigger time frame, we know that eventually it's going to go back down. But what we want to look at is we want to see what's going on the overall time frame. So if I'm on the monthly and I'm looking at silver right now, silver is trading right in between the 50. So when it's trading right in between the 50, it's not really telling us anything. I don't really like trading. I will not get anything with this. I will not trade based off of that. Now it's different because I'm looking at the monthly time frame. Now that I'm looking at the monthly time frame, I'm not going to take any rash decisions on a monthly time frame based off the RSI, because this is not telling me anything. You can see it's pretty much flat here. So when these lines are flat, there's no significance. The market's sideways. You can see the market's been sideways too. Right here. This is a sideways market. The market's not doing anything. Now we're going to break it down to the weekly time frame. Now what we can see on the weekly is price is heading down. You notice how it was flat here, came back up, hit the 50. These can be used as support and resistance as well. So price breaks through the 50. I believe it's going to come down here and then go. Exactly how my analysis plays out. Now let's go ahead and look at the daily. The daily time frame, this is pointing straight down. This is going to come here and then go. That's my analysis. I'm predicting that silver is going to be weak, which is really strange because the dollar is weak as well, and gold and silver are not going up. So prices broke through the 50, and you can see right here that it's been consolidating on the 50 for quite some time. And then if you look at the consolidation, it's really nothing going on there. I do not want to place trades in this. This is nothing. This is a correction. You place your trade in a correction, you're going to get caught. You're going to sell here. Then the price goes right back up. You're probably losing about $40 right here, 50, and then it comes back down. I don't want to be in this because price is just playing your price. You're going to be out of profit. You're going to be in profit. One second you're going to be in profit. Another second you're going to be out of profit. It's just a nasty thing to be in. That's why we wait for this breakout of the flag to occur. So back to the RSI. We can see RSI is just playing on the 50. Then eventually it breaks. Now that we have our analysis, because if you don't have this analysis up and you were just looking at this, how would you know where price was going to go to? You can kind of predict that the space from the line to the 30% is similar to where price is at right now to where we're going to buy at the support level. So we know on a daily and weekly time frame that the RSI is pointing down. It's telling us that it's selling. So let's go ahead and look at the 4 hour. 4 hour, what's interesting about the 4 hour is you can see it's on the 30. So we can see on the 30 minute that the 4 hour is oversold. So when something's oversold, what happens? Let's find out. What we can see in this chart is price has an impulse, followed by a correction, followed by another impulse, and we can look for a correction right here. Some important things to know about the RSI is when something's oversold, there's a lot of sellers in the market. You can see by looking at this whole structure that there's a lot of sellers in the market. There's a lot of selling going on. So because of that, the RSI indicator is now crossed beneath the 30. You can see right over here. So RSI crossed beneath 30, it's oversold. So some buyers are going to come in. Now people right here were probably expecting pricing to go back up. Now this may go back up, hit the 30, then go. Or, since this is a really strong trend right here, this may come back up short term, come here, and then go. So what could happen here? We can even predict a flag pattern will show. This may happen. This might correct right here. Then go. Exactly. You can see the space from here to here and the space from price to where I'm expecting the correction to go match up evenly. So we know on a 4 hour chart, we have to wait for a correction. This is going to pull back before we do anything. If we just looked at the daily time frame and we saw that it was selling and we just sold, then you're going to get caught in a correction. You can use this to minimize your drawdowns as well. We look at a 2 hour chart, it's oversold. So everything on a smaller time frame is oversold. Let's see. So now that I see everything is oversold on a smaller time frame, I know that this is going to correct. I know you can even see it coming in on a 30 minutes starting. I know that price is going to correct and it's going to have some pullback. So what do we know? We know that the majority of smaller time frames are oversold. So when the majority of time frames are oversold, we're going to have some correction. There's too many sellers in the market. There's too many sellers on silver. Silver is going to pull back, and we know that when we look at a daily, the daily chart is selling. The daily chart is not pulling back at all. So when this either today or tomorrow, the rest of this candle might have some pullback, but the daily is going to close red. No doubt about it. So we're following what's going on in the bigger time frames. We're seeing what's going on in the overall trend. We know the overall trend is down. We're using the smaller time frame to predict, a correction, retracement, to where we can find a good entry. Because if we enter now, we're going to get caught in this trade. So that's a silver analysis too. We're going to wait for prices to get here before we do anything.